This is Season 1, Episode 6 of the Steady Trade Podcast. Today is the final episode of Season 1, so we will be reviewing the most important concepts from the first 5 episodes as we review The Wolf of Wall Street to tell you how accurately they represented the world of penny stocks and day traders in this movie. We'll also be announcing our lucky Season 1 prize winners. If you didn't win this time, don't give up. We will be back with Season 2 starting in November 2017 with an all-new giveaway contest and, of course, all new episodes. Thank you for joining us for Season 1. Let's wrap it up right now. Take a listen.
Once upon a time, there were 2 guys, Tim and Steven.
This is the Steady Trade Podcast.
It's the Steady Trade Podcast.
I hate that guy.
One was a skilled, experienced product trainer for Stocks to Trade Pro. The other, a student of Stocks to Trade Pro, and a bloody handsome one at that. Probably the most handsome student on the course.
I hate that guy.
And one day, Tim and Steven started a podcast, and they called it the Steady Trade Podcast. And they recorded 6 episodes, and they were called Season 1, and they wanted Season 1 to be a starter course of sorts for people who wanted to learn more about day trading penny stocks. And they talked about a lot of things, the difference between day trading and long-term investing, or why they prefer to trade lower price stocks, and what it takes to become a consistently successful trader. They talked about the importance of scanning stocks, finding a manageable number out of the thousands available, and some of the tools used to identify the best stocks to trade. And they talked about the importance of news reports and other catalysts that can potentially move a stock, and the importance of having a trade plan and how to escape from bloodthirsty lions in a jungle, and how jungle lions are much more rare and vicious than the old boring prairie lions. And finally, they reviewed the movie The Wolf of Wall Street. We all know that movie. And the Australian actress Margaret Robbie listened to it. Good day, Margaret.
Hi, boys.
And she heard the most handsome voice she had ever heard. I mean, mine. Obviously.
I hate that guy.
And she cried. Real, actual tears. Not any of that fake actress Like, she cried for days and weeks and months because she knew in her heart that she could never have him. Never. But she wanted him so bad. And then one of her friends told him all about it. So he got on a plane and he flew. And then I don't even know what on earth are we talking about? What am I talking about?
This is the Steady Trade Podcast, powered by Stocks to Trade, with hardworking, battle-scarred veteran Tim Bowen and pie-in-the-sky daydreamer who still can't quite master his fidget spinner, Steven Johnson. Take it away, guys. Hey everybody, Tim Bowen here, and welcome back to the final episode of Season 1. Before we start our discussion about The Wolf of Wall Street, I want to announce our Season 1 contest winners. Over 3,000 people entered this contest, and we came away with 11 winners. 5 people won a giant box of Tic Tacs.
Even the Tic Tacs, my wife would love those when I came home. She'd be like, press.
So congratulations to Jeannie, Keith, Liz, Scott, and Garcelle. May your breath be minty fresh from this day forward. 5 other people also won some great prizes. So congratulations go out to Kristen for winning the Bose headphones.
Oh my gosh, thank you so much. That is awesome. I'm so excited to talk to you guys. Thank you so much.
To Ryan for winning an Apple Watch.
Oh, cool.
You don't already have one, do you?
I do not.
Okay, and you're not one of those like crazy anti-Apple people, are you?
Nope, I'm actually talking to you on an iPhone.
Perfect. To Craig for winning an Oculus Rift virtual reality bundle.
Nice. Wow. I mean, that is totally a futuristic thing, like VR, virtual reality. Oh my gosh. That's sweet. That's so sweet.
To Marissa and Nick for winning a laptop computer.
It would be nice actually to have another one because sometimes he pushes me out of the way. We're fighting. We're rolling on the ground. I usually kick his ass, but don't publish that. Nice.
Yeah, that is awesome.
That is
Thank
awesome.
you.
Thank you guys so much.
To Tim, not me, or Tim Sykes, for winning a Samsung TV.
That is so awesome. I don't even know what to say, guys. Thank you so much. Oh, wow. I don't actually even own a TV.
And special congratulations to our grand prize winner, the Steady Trade Season 1 greedy little bastard, Isaac Boone.
Isaac, I'm sorry. We are just playing a game with you right now. You have actually won the Tic Tacs.
Awesome.
But in addition to the Tic Tacs, you have indeed won a 55-inch TV, a Dell Inspiron laptop, an Oculus Rift VR bundle, an Apple Watch, Bose Soundport headphones, and
oh my gosh,
as much as I am so excited you're a Stocks to Trade Pro member, which is awesome. I couldn't believe, and we did a totally random, we did a number generation, completely random drawing. I love that you're an STT Pro member, but the beauty of it is you also get your membership extended by a year with another free year of Stocks to Trade Pro on top of your existing.
Oh my gosh. That is incredible. That is awesome.
Isaac,
thank you so much.
You greedy little bastard.
So what we got to do is, and you might have already said it, as to kind of wrap this up, I need you to just tell Stephen and I both that, we want you to confirm and say it in your words that you are indeed a greedy little bastard.
I'm a greedy little bastard.
That's the best kind of day trader right there. The greedier you are, the better you make as a trader. Stephen and I had a really good time talking with all these winners, and you will get to hear those conversations in bonus mini episodes that we will publish over the next few weeks before the start of Season 2 on November 6th. So keep your ears peeled for those, and thanks again to all of you who entered to win. We will be doing this again really soon for Season 2. So now, let's finish up Season 1 with a review of The Wolf of Wall Street. Welcome back to episode 6 of the Steady Trade Podcast. In today's episode, we're going to kind of bring it all together, everything we've been talking about in the previous 5 episodes leading into today. We've got a bunch of great stuff to go over today, but the main learning and educational point of today's episode is actually executing a trade. We've talked about why trade low price stocks. We've talked a little bit about charts. We've talked a little bit about catalysts. Now we've got tons and tons and tons more to go over, but really now we've got a lot of the cogs in the wheel ready to go, and now we want to actually go over actually executing a trade.
And just because you know how to execute a trade, it doesn't mean you should execute a trade. There's a difference, right?
Yeah. So you've basically, I've often joked about all you need is a $500 laptop and a $500 brokerage account, and you can enter trades, but that does not mean you're ready. So obviously you do need those things. Now there's a lot of brokers out there. We don't make specific brokerage recommendations, but you could Google penny stock broker. There's a lot of resources out there that will tell you what broker is applicable to you based on your account size, based on your experience. But you need a brokerage account in place. You do need a computer, and then those are really, it's very oversimplified, but between those two things and then an information and charting platform, which obviously at the Steady Trade Podcast, we are powered by Stocks to Trade. So we are a little biased and recommend Stocks to Trade. But those three things, a brokerage account that is funded with some, whatever discretionary income you have to trade with, a laptop and Stocks to Trade, you are ready to go.
And just learn a few days before. Don't be too over-eager. Learn what the different types of executions are, the stops, the limits, the buys, the sells.
Again, there's a lot to go over, but, the other nice thing, keep in mind with Stocks to Trade is we also have a paper trading module, which is a great tool for new traders or maybe you're just getting started in this journey and you're not ready to risk real money, which is totally great. I say take it slow. I often say you can spend a couple years to learn how to trade and then you can do it for the rest of your life. So many traders try and rush in and get there too far too fast. And that is one great thing of Stocks to Trade. When I say paper trading module, it is a tool that allows you to actually execute trades, the same mechanics of buying and selling, position sizing, everything, all these things we've talked about without risking real money. Now, your losses aren't real and your gains aren't real either, but it's just like practice. And it's important to actually get the mechanics down.
Yeah, no, for sure, and it's something I probably wish I did more of. This either paper trade if you can really stick to it and have the discipline, which you should really have the discipline to paper trade before you actually go into real cash, or just trade really small amounts.
Yeah, and that is again, we're not financial advisors, but that is another good angle. I've often, advised guys that, even if you're that new and you don't want to paper trade, you should be trading very, very small sizes, a couple hundred shares, money that you can risk, just like money you would risk if you went on a vacation or something, purely discretionary income that you can use to get that, again, the mechanics of actually executing trades.
Yeah, because like I said, once I got ahead of myself and I lost $500 in one day on PLUG and I spent the day in bed the whole day upset, and I didn't eat. I'm not joking. I don't want other people to not eat and spend a day in bed.
Yeah. So check out paper trading again if you're new, and this is a great way to implement what I'm about to talk about. So execution is the theme of this episode. So remember, there's a stock entry. So we're going to talk about buying in this episode. We'll talk about short selling more in the future, but just for the sake of brevity, we're specifically going to talk about buying a stock. I think pretty much everybody understands that if you're listening to this episode. You're looking, if a stock was at $1 yesterday and it's at $1.50 today, you're looking to potentially buy that stock in hopes it goes to a $2 or $3. So we'll talk specifically about going long and buying stocks. So the way I approach it is I always use the long-term chart to guide my decisions. Maybe that's a 1-year chart, maybe it's a 5-year chart, but technical analysis, I've talked about it in previous episodes. History doesn't repeat, but it rhymes. And if I can find a stock that has broken through key levels in the past, and again, ideally there's news, then I'm going to look to target those key levels for entries. I'm not just going to randomly buy at any price. I want to hit a specific level that stock has ran through in the past.
Yeah, and what I'd also say is sometimes a good tip from another trader that I've met is let it break the level and let it come back down and let it support on that level. And if it supports on that level and then starts to push off it, then it's another sign of strength.
Yeah, totally. That is what that's what I call, I often say letting the stock prove itself. A lot of new traders will incur a lot of losses because they want to chase the stock. They get bit by what's called FOMO, F-O-M-O, the fear of missing out. So you come in the morning, you're ready to trade, you've had your coffee. If you're like Steven, you've had your Quaaludes, you're fired up, you're ready to go. You see the stock running, and as soon as it hits $1.50, in my example, you buy. The instant it hits $1.50, then the stock pulls, you stop out, you get frustrated, and you're like, hey, buying these moves doesn't work. But what Steven's talking about is you let that stock run. Watch it. Be patient. Don't buy at 9:31 a.m. Let it break that level. Let it settle back and see if that $1.50 level now becomes support. Now, ideally, we get into the afternoon, into power hour. That stock starts lifting off $1.50. That's your entry. That's what I call letting the stock prove itself.
But also what I found as well is the majority of the time, no trade is the best trade. And for some reason, I can't remember the movie too well, but if you remember Groundhog Day.
Yep.
And I can't remember, who was the actor's name in Groundhog Day? It wasn't Tom Hanks, the main guy.
Bill Murray.
Bill Murray! Right, Bill Murray was in Groundhog Day, right? And I'm not sure what the correct ending was, so I'm just going to make it up to suit this story. But Bill Murray kept on doing a crazy thing, having a crazy day, where the waitress would drop the food on the table, and you'd end up driving on some train tracks, and he kept on repeating the same day on Groundhog Day, and it was Groundhog Day that was repeated. But the thing is though, like, sometimes I feel like with trading, it's like it's a very, very, very slow process where you've got to repeat the same mistakes and repeat the same day over and over and over and over again, just to slowly develop your sense of not to chase, to be more disciplined, to resist human urges, to resist basic human instinct. And it's like a refining process for me over the last year. Just to refine and blunt my emotions.
Yeah, and I mean, there's so many sports analogies. It's like if you think about, if you pick up golf today and you've never golfed, I mean, do you expect, to hit par, or do you expect to play under par? You're going to have to swing that club hundreds, thousands of times, and you're going to hit shots into the woods over and over and over again. But if you stick with it, you make good trades, you refine your trades, you review, okay? One of the reasons I think I'm still a crappy golfer, I was golfing 25 years ago in high school, is I go out, I hack around, I don't ever think about, okay, what did I do there? Did I widen my stance? Did I narrow my stance? I never think about it. I never review it. So hence the reason 25 years later, I still stink. And with trading, if you keep that journal and you stay disciplined, and win, lose, or draw, you sit down with yourself with your notebook at the end of your day and you say, what did I do right and what did I do wrong? That's how you get better.
Yeah, I'd also say with golfing, I don't know any good golfer who's not had lessons, who's not had proper lessons.
Yep.
And it's the same with trading. If you don't get taught by someone and you don't get education, you're going to have a crap swing forever. And same with me dad. My dad's crap. He's been doing it for 30 years and he's terrible. He's a terrible golfer. Still, he's like, Stephen, how do I still go around in 100? I'm like, Dad, because one, you're quite old, and two, you just don't get lessons. You repeat the same mistakes, and if you don't have an education in trading, you're going to not even know the mistakes to know that you're repeating them, because no one's going to tell you and no one's going to show you the right way.
So that is, that's really what I want to kind of finish on when it comes to actually executing that trade. There's so much more beyond just having a laptop, beyond just having a brokerage account, beyond having, hopefully you have stocks to trade to help guide you, but you really need to be able to look for key levels on the chart. You need to be able to fight the fear of missing out, and you need to be able to say to yourself, I want to buy this stock. Let's loop back to my example. It spiked from $1 to $1.50 in the morning. You didn't want to chase in the morning. You were being disciplined. You were determined to wait till 2 p.m., which is normally when momentum stocks kind of wake back up. There's the midday low. We'll talk about that a lot. But you were disciplined. You waited. You saw that stock base at that $1.50 level all day. Maybe also use a technical indicator that we use a lot. Maybe it's VWAP. Maybe it's a moving average. Now the volume starts to come in, which is the trading volume, number of shares. The stock starts to percolate day. And then, I know it's not fun. I know it's not sexy, but you have executed based on your plan, because you said in the morning, if this stock bases, perks in the afternoon, then I will buy and I will risk my stop loss. Remember, there's no such thing as a trade plan unless you've set your risk. Then you say, if this stock fails to break out, drops below that 150 area, I will stop out for, say, in this example, 10 cents a share, 15 cents a share. Now you've stuck to your plan. You've waited hours. I know that sounds boring and dry, but you've executed on your play. Now, Ideally, the trade works, spikes into the close, you take a nice profit, you finish the day happy, but vice versa, the trade fails, doesn't work, you stop out for a small loss, you say, damn it, I followed my plan, I'll be back tomorrow.
Yeah, and it's like, you've got to follow your plan as well, because when you follow your plan, it's like you're in England or you're in America and you know what time the bus comes. Everything's going to work out okay. Everything's straightforward. Everything's sensible. You've planned it. You know your route. You know where you're going, and you know your left turn and your right turn, because you've anticipated the moves. But if you don't follow your plan, if you decide that something goes out of, say you decide your stop should be at a certain level and it goes below that level, and you think, well, I'll just stick in it anyway, then you may as well be in Japan. You may as well be in Africa, and you're lost and you don't know where the nearest toilet is, and you need the toilet, and it's panic time.
And I tell you, hopefully I haven't drove the listeners nuts with this adage, but 90% of traders fail. I say 90% fail because they don't have a plan and they let that small loss, okay, back to my example, instead of losing 10 or 15 cents a share when the stock fails, so instead of losing $100, $150, they then start justifying they didn't have a plan, that stock gets ugly, it closes weak. The next morning, it gaps down, it gets even uglier, and now, instead of losing $100, they've lost $1,000. Their account is cut in half. They're frustrated. They're angry. That's why traders fail.
So imagine that. You've lost $1,000, you're frustrated, you're angry, and you're in Japan and you haven't got a flight home.
That is the proverbial up the creek situation right there.
All the losing traders are in Japan with no flights home. Or they're in Africa. No, but seriously, you're in a world of pain and you're lost. And everyone does it. There's no point saying, I'm not going to do it, because you will do it. You've done it. I've done it. It's just how many times, slowly over time, how many less times can you do it? How can you get better and do it less?
So again, that is the kind of what we wanted to finish up with on execute. I think a lot of great things in these sex episodes. We really laid your foundation. We've got a bunch more coming, but what we kind of want to focus on next is maybe have a little fun, but some education at the same time. And we're going to go over The Wolf of Wall Street. We're going to kind of watch this movie. Steven and I are going to comment and relay how it is applicable to you as a day trader. Now, the movie
there's a lot to learn from this guy, yeah.
Yeah. I mean, the movie is based on Jordan Belfort, which, is a very, I'll be politically correct, a very sketchy character. I don't know how many embellishments were made in the movie. I'm sure in typical Hollywood fashion, there were many, but the truth is that he was behind the manipulation of stocks back in some of these pump and dumps. And there's a lot of lessons to be learned there. Now, ultimately, he let, success go to his head. He, took the easy money, took the easy route, got involved with a lot of shady characters and drugs and everything else. And hence the story arc of the movie, he ends up falling at the end. But there's still lessons to be learned directly to trading.
Can I just stop you there, because Tim, you seem to have a bit of a negative tone about Jordan Belfort. And I mean, if I was going to look at Jordan Belfort and if I was going to describe him in a few words, I would say hero. Aspiration.
Well,
like someone I'd want to become. Would you not? Do you not think I want to be that man?
Yeah, I mean, I guess if your goals include divorcing, getting divorced by your beautiful wife, having your children most likely hate you, being a convicted felon, spending time in prison, being a drug addict, and hated by pretty much everybody in day trading, then if those are goals, then yeah, I would recommend emulating Jordan Belfort.
But do you not think though, like maybe you could become Jordan Belfort but just be a bit smarter and then not get arrested and still do all those things and then you'd be better?
I think guys have been trying to do that since the beginning of time, Stephen, and I don't know if it has ever worked. But again, there are some definite like real market mechanics in the Wolf of Wall Street, and we're going to go over that now and maybe have a little fun with this and also be educational.
Okay, cool.
So most people don't know what day trading is or even who day traders are. They see movies like Wolf of Wall Street where they hear about penny stocks for the first time, and then they jump to a lot of bad conclusions, in my opinion.
No, but honestly, like that for me is the thing. Like, people don't know what penny stock day trading is, and then you will see the Wolf of Wall Street, and like if you think that's what Jordan Belfort did with penny stocks, then it's dead wrong, and it's also dead sad for us, because like honestly, I am not a dishonest, coked up, win at any cost person. Like, I'm not a money grabbing asshole, but like the guys in Wolf of Wall Street are, and that's where there's a massive misconception.
Yeah, and I mean, there's a lot of important differences between, what we do and what they did on Wall Street. Yeah, we're trading the same instruments, but, we're not trading other people's money. I call it OPM, okay? There's actually a movie, a Danny DeVito movie called Other People's Money about this exact topic, and there's a big difference between what we do with our own money or what you might do as a potential day trader with your money and what they're doing on Wolf of Wall Street.
Yeah, like I'm not that guy. I forgot the name. We'll watch the movie and we'll get into it. But I'm not like Roger Cooper Sterling or Sterling Trader or whatever it was. Like, we do not ring people up and say like, you must buy this stock, we must buy this stock, you must sell this stock, we're going to keep your money. What we do as day traders is we make our own decisions. If I lose money, I'll lose my money. Like on Wolf of Wall Street, they make money from other traders' commissions or by influencing other people to take a trade and taking a percentage for the recommendation. But for us, like, we're free agents. We can trade on our own responsibility, and if we lose, we'll lose. If we make gains, we make gains. But we don't make gains off other people's losses. And a broker like Jordan, he will take advantage of his clients, and a day trader has no clients. And we can't really take advantage of ourselves unless we want to cannibalize ourselves. So for us, the Steady Trade podcast, it's to help educate you so that this doesn't happen to you. Nice, I like it.
There's your lion.
I like it.
The world of investing
Yes. Yes.
can be a jungle. Bulls, bears, danger at every turn. That's why we at Stratton Oakmont pride ourselves on being the best.
Can I just say immediately, like, penny stocks, like, we do not manipulate companies. We're just day traders, but other penny stocks, they will act like this. They will try and feed day traders and investors and penny stock investors the most bullshit ever to get them to invest in a company. And it's up to day traders to buy it.
Yeah, remember, I mean, that's something a lot of people don't realize is, one of the things that's great about penny stocks, but what you might not know is 99% of these companies, all they want to do is sell stock. They are all going out of business. They are all terrible companies. They need to keep selling stock every day. Well, not every day, but they need to keep selling stock on regular intervals to stay in business. So they will sell you an infomercial exactly like this to get you to buy stocks. And that actually happens in penny stocks a lot, where they have those fake infomercials to get you to believe in the company.
And the funny thing is, like, we will still buy the company. We will buy absolute scams, but you've got to know that you're buying a scam. And yeah, we buy scams every day, but you've just got to know that you're buying a scam, and you need to get ready to get out of it quickly, because it's like a ticking time bomb.
So they talk about right in this intro, the difference between bull and bear markets. We're in a long running bull market right now, which I love, but Stephen, you're obviously the younger guy. You probably were in elementary school the last time we had a bear market. So, in that context, Stephen, do you know the difference between a bull and a bear?
The bulls are from Spain, and the bulls have the horns on them, and I think the bears are more North Canada. No? Is that correct?
Well, I think there's bears in a lot of the world, but no, that wasn't what I was getting at.
You're talking about the trading reference, are you?
Yeah.
Okay.
Do I need to set it up a little better for you? You know, I've got, my daughter has some stuffed animals. Would you like me to show you some visuals of like a little bear in a bowl? Or?
No. I mean, I understand what you're saying, but when I think of a bear, I think of like a great big roar. I think of that great big towering Canadian maple leaf eating syrup Canadian thing. In Canada, you have bears, right?
Yes, there are bears in North America, including Canada. Remember, I'm not in Canada. Now you're pulling the American viewpoint where you just think that the rest of the world is one big country.
Can I just say one thing though?
Sure.
1,000-pound polar bear. Are you going to ask us why I'm saying it? Go on, 1,000-pound polar bear.
Okay. Why are you saying 1,000-pound polar bear?
Something to break the ice. I say it to girls every week.
I hate that guy.
Something to break the ice. You get it? You get it? All you could say is something to break the support level if we're trading stocks.
Yeah. So in the traditional, if you might, and actually some of the listeners might hear that a lot, might hear bull markets, bear markets, and wonder what the actual definition is. And, there are a lot of guys look at it differently. A lot of analysts look at it differently. There are certain time frames that will come into play, but really, for me and for day traders, when we talk about a bull market or a bear market, we're just talking about the overall markets that are steadily uptrending or steadily downtrending. So, and when we get bullish, when we want to buy stocks, we really want to, take long positions. We love bull markets. And when we're looking to get short stocks, we do that in bear markets, which are steadily downtrending markets. So, and that's the beauty of day trading is we're versatile. We can take advantage of any market.
My name is Jordan Belfort. I'm a former member of the middle class raised by two accountants in a tiny apartment in Bayside, Queens. No. My Ferrari was white like Don Johnson's in Miami Vice, not red. See that humongous estate down there? That's my house. My wife, Naomi, the Duchess of Bay Ridge, Brooklyn, a former model and Miller Lite girl. In addition to Naomi and my two perfect kids, I own a mansion, private jet, 6 cars, 3 horses, 2 vacation homes, and a 170-foot yacht.
So what they've done there, and what Jordan, aka Leonardo DiCaprio, has done, is set up exactly the kind of the age-old sales pitch for trading stocks. He's got a Ferrari, he's got a yacht, he's got a model wife, he's got a multi-million-dollar mansion. So that is basically the lifestyle that he's going to try and sell to his to his clients. And that's what gets so many traders in trouble, is they come into it with the expectation that they're going to get rich quick. There's a reason we call this the Steady Trade Podcast, okay? We're taking a realistic, a grinding type approach to trading. We're never going to tell you you're going to be, make $1 million and have a Ferrari and have a yacht and a mansion within a year or two. Maybe you can over time, but it takes time. You're not getting this lifestyle. Don't let anybody convince you of that.
But I like that, because anything worth having takes time to get, and
yes.
Nothing like, I mean, you might get the extremes like Stephen Docks, who makes like $1 million in 11 months, but most of us average humanoids, it takes much longer. And like for both of us, it took for you, it took maybe 1 to 2 years, and for me, I'm just getting some sort of consistency after a year. A little over a year. It takes time. And yeah, Jordan Belfort, it's the first example of him being a dick.
So ironically, if you flash back to episode 2, where we went over our friend Tim Sykes interview with Larry King, Larry actually asked him, well, why do you post pictures of your Ferrari and your travels around the world and supermodel girlfriends and everything? Well, Tim made the point that, he's trying to inspire you with the possibilities of trading.
Yeah, and I mean, for me, I saw him traveling around the world, and I thought, I want that lifestyle, and that lifestyle must be possible. And then at first, maybe I thought, well, can I get it in a year? And then I realized, no, I probably can't get it in a year, but can I get it in 10?
I probably can't get it in 10, but I think you need that excitement to be first thrown in, and then once you get into it, you realize that you enjoy the process, and then I'm happy to take 5-10 years if it means I have that freedom later.
See, money doesn't just buy you a better life, better food, better cars, but it also makes you a better person. You can give generously to the church or a political party of your choice.
So Jordan makes a very interesting point there that I see often in finance and often in like true crime, like CNBC American Greed stories, is these guys make so much money. They're drug addicts. They're jerks. They're doing illegal stuff, and they simply think, just like Jordan said, oh, if you give some of that money back to charity, you're a better person. Well, I'm sorry, Jordan, you're not a better person just because you put some of your money into charity. You're still a drug addict. You're still a piece of crap, and I see it all the time in trade. Again, watch American Greed on CNBC, a great series, and you'll see every one of these degenerates is donating to charity because they think it somehow cleanses their soul.
So, Tim, I mean, the way that Jordan Belfort speaks, it seems crazy the way he's behaving. I mean, like from your experience being from the States, having seen Wall Street before, I mean, because this does not happen in Stocks to Trade Pro. Everyone's pretty humble. Everyone just wants to get on with making money. Like, does this happen in real Wall Street from your experience?
Again, I don't know any, I don't personally know any billion-dollar hedge funds, guys, but I do know that this culture does exist on Wall Street, and it is the exact opposite of any interaction with anybody I've ever had, whether it be in Stocks to Trade Pro or other trading communities. The majority of them they're like us. They're average guys, average gals. They're just looking to supplement their income. They're not looking to do coke and hire prostitutes, and they're not worried about power. Jordan mentions that he can eviscerate his enemies with money. I'm not looking to eviscerate any money, any people with my profits. I want to provide for my family. I want to go on vacations. I want to have freedom. That's why I trade.
Yeah, and I think it's all about getting a little bit of money to get by, not about ultimate domination and power. And that's the difference, right? That's the difference.
Yeah, again, I think, we're obviously watching this movie and talking about it, but I think everybody pretty much knows how this story ends, and that's not how I want my story to end.
You are lower than pond scum. You got a problem with that?
No problem at all.
Good, because that is what you are, pond scum. Your job is connector, which means that you will be dialing the phone over 500 times a day, trying to connect me with wealthy business owners.
So this is, what they're doing is, this is a boiler room. They're doing cold calls to try and sell stocks. So, Jordan's entry-level position is he's just running through a Rolodex making calls, which was very common back in the day, but actually still exists. Have you ever gotten a call like that, Stephen?
No, it's pretty crazy. I mean, I guess coming into trading in the last year, I've never had the call. I've never had the brochure promoting the stock. I've had the emails that I've signed up to for with the penny stock newsletters, but that's it. I've never had the call. You've had the call?
Yeah. I've had, a lot of the times what they will do, and a lot of the calls I've gotten is what they do these days is they'll actually call you with like a real stock. Like I've gotten a call for like Home Depot or whatever, because what they know that people are wary of these stocks. So what they try and do is they get you into like a real stock. They get you interested. They get you the taste. Then they pitch you on basically exactly what Jordan Belfort's doing, a low-priced stock. So,
but the good point with us is when we're pitching ourselves low-priced stocks, we're the ones who lose the money. So we're accountable, and that's the difference.
So one of the reasons I push that point of having your own ideas is you need to own your trade idea, and that's where the plan comes in. I need to find that stock myself. That's why we talk about the process. That's why we talk about looping through, and you got to have your own ideas, because if you don't, you trade stocks that aren't your ideas, you trade tips, you start justifying, you overstay, and it never works.
I have to say, the thing that's really frustrating in the first 6 months of trading is that you don't know enough to make your own plan. Like, you don't have enough knowledge to make a good plan. So you kind of naturally do follow other people's plans, because it takes a good 6 to 9 months for you to have enough information to accurately think, well, I've seen this before, this should happen.
Yeah, and that's why you got to put in the reps and you got to put in the time, because, everybody is sold. I'm sure, I have no doubt that people watched Wolf of Wall Street. And actually, I know this from people I've talked to. I mean, there was a big boon in day trading brokerage accounts opening after this movie ran, because people see that lifestyle. And I tell you, if you come into it with a get-rich-quick mindset, you will fail. Yeah, I mean, there might be one out of a million that do it, but you got to come into this as a trade, as a skill. And like you said, Stephen, I mean, it's frustrating because you're looking at all these stocks and you can't decide. So then you start looking to Twitter, you start looking to subscription services. I know plenty of guys that sign up for every newsletter looking for picks, but it's not sustainable, because what are you going to do? Are you going to take their picks for the next 50 years? It doesn't work.
But it's also like, you can convince yourself thinking, I'm going to make it, I've got something different. And then you look at all the numbers moving up and down in the market, and then you think, shit, I'm in the jungle. I actually don't know what I'm talking about. And you get that fear, that panic.
And that's why, again, take your time. Steady. Again, I know I say it a lot, but there's a reason we call it the Steady Trade Podcast. Yep.
We should say it together. The Steady
Trade Podcast. That worked. That was great.
Okay,
I think we might need to rehearse that a little bit.
Okay.
You want to know what money sounds like? Go to a trading floor on Wall Street. So I couldn't believe how these guys talk to each other. I was hooked in seconds. It was like mainlining adrenaline.
So what Jordan has happened there is what happens to many, many, many new traders. The juice, the action. And that's what brings a lot of guys and gals to the market. And hey, man, if you're coming for juice and you're coming for action, you're going to have a hard time too.
No, but I mean, the juice and the action is there, but you've got to know how to manage it responsibly. Like, if you get inspired by the glitz and the glamour and then you start looking for the juice and the action without the education, then you're done for. Because you can have it, but you've got to have it in a year's time. You've got...
And there's passion and there's energy. I mean, again, if you've been in plenty of Stocks to Trade Pro sessions where it's the market open and there's 6 stocks moving and I'm screaming and yelling. I mean,
it's fun.
There's, and that's what makes it interesting every day. But you need to have a controlled and a disciplined approach to that. No different than, again, I use a lot of sports analogies. I mean, Tom Brady is playing in the Super Bowl and there's 60,000 people there and 10 million people watching, but there's action, there's cheering, but he's got to focus on what's happening on the field.
Exactly, and it's how well can you control the action? How well can you manage yourself in a stressful environment and hold the discipline to cut the loss, to not take the trade, to take the right trade? It's how well can you perform under the lights? And the longer you're under the lights, the better you get. I mean, that's my understanding of it. That's how I've adapted, and still do adapt.
Number one rule of Wall Street: nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, in circles, least of all stockbrokers. So if you got a client who bought stock at 8 and it now sits at 16 and he's all happy, he wants to cash in, liquidate, take his money and run home, you don't let him do that. Okay. Because that would make it real.
Right.
No, what do? You get another brilliant idea. A special idea, another situation, another stock to reinvest his earnings and then some. And he will every single time, because they're addicted. And then you just keep doing this again and again and again. Meanwhile, he thinks he's getting rich, which he is on paper. But you and me, the brokers, we're taking home cold hard cash via commission.
So again, what they're talking about there is, again, this is very different. Even though we're operating in the same ecosystem, what these guys are doing is very, very different than what Steven and I are doing, any day traders are doing with their own money. Remember, all these guys want to do is sell. They want you in and out of stocks as much as possible because they collect commissions. Every sale, they get a commission. They don't care if you lose money. They don't care if you make money. I mean, they would prefer you make money because if you do good on the trades, you'll keep coming back and they'll be making commissions. But they don't care. They don't care what the stock does. They just want you in it.
And there's just the other thing that I want to say is, I mean, we're saying at the start of this that Jordan Belfort he's a douche, he's a bad guy, I don't want to end up like him, but I would pose the argument that, and it's something to do with morality. I mean, is Jordan Belfort morally a bad person, or has he been corrupted by Wall Street? Because right now, he's a bit greedy with money, but he's not a bad person. He's just said that isn't it advantageous if we make money for clients too? And isn't Wall Street corrupt, or is he morally wrong? Because I think Wall Street has corrupted him, and he maybe initially wasn't a bad person.
Obviously we're not told the whole story, but I think you're totally right. You talk about, walking into a lion's den. He wants to be successful. He mentions he has a young bride. She cuts hair. He has all these grand aspirations, but he's now dropped in with this wolf, the Wolf of Wall Street. And is it his fault or is it the system's fault?
And he's becoming the person that he's speaking to now, and someone else will become him, and it's a never-ending chain. But I mean, can you relate that back to penny stocks? Does that relate to us? I mean, I think not really. I mean, for us, it's just you work and you get what you put in, and it's. What do you think? There's no Jordan Belfort of penny stocks, really, is there? I
mean, we talk about eat what you kill. That's what I want to do. I don't want to collect. I don't want to collect money off of your trades. I want to make my own trades, and just getting people to buy stocks is nothing that I don't think any of us would be interested in. We want to be able to do it ourselves. That's why you Googled, finance podcast. And that's probably why the listener found us, is they want to learn how to do this themselves.
Yeah, so just to make the major distinction, I think it's taking money from other people for advice, but for us, it's an education package. It's you going on a self-developmental journey.
I'm Jordan Belfort. I'm the broker from Rothschild from New York.
Yes, have a seat. How are you?
We're your Quotrons, your computers.
No, we don't even need computers here. We just trade right off the pink sheets here.
Pink sheets?
Yeah, they're penny stocks. Companies that can't get listed on NASDAQ, they don't have enough capital, their shares trade here.
Penny stocks?
So what's interesting, Jordan's now being introduced to penny stocks. Now, this other character here mentions that these are stocks that can't be listed or are unable to be listed on what we call the big boards, which is the New York Stock Exchange or the NASDAQ, which is commonly referred to as the OTC markets. Now, the OTC markets kind of come and go. They were pretty strong a few years ago, but in modern nomenclature, we still consider, any stock under $5 a penny stock. And it could be on many, actually right now, probably the majority of the stocks Steven and I trade are NASDAQ stocks.
Yeah, and it's funny because I don't know if you know the difference between, how do OTCs and NASDAQ stocks, trade differently? Because apparently there is a difference, because for me, with OTCs, the over-the-counter bulletin board stocks, you seem to get a lot of green candles in a row and then a lot of red candles in a row, but NASDAQ are more choppy. Is that the way it is?
Yeah, because again, remember, OTC stocks are traded, by physically, basically by actual traders, where remember
that doesn't really
NASDAQ
happen,
stocks.
Right? That doesn't really happen, though. Does that really happen?
Yeah.
Is it true?
I mean, there is still
It's electronic.
there's still some of that going on. But the difference with NASDAQ and NYSE is, I mean, it's fully electronic trading. Everything is done by computers.
So just a question that I have that I'm sure lots of other people will have that maybe you can answer is, why can you not get out of OTC stocks when they're having red candle after red candle, but you can get out of NASDAQs? Is it literally because it's over the counter?
Yeah. I mean, there's just so much more liquidity. There's so many, again, all of your trades are executed electronically, and there's just so much more liquidity is the term in fully electronically traded markets like NASDAQ or the NYSE.
Okay, fair enough. Because like the Bitcoin were heavily volatile, but you still couldn't get out.
Yeah.
So I just don't know why, but
that's actually one of the reasons. It does not bother me one bit that OTC stocks aren't in vogue anymore, because you run into that type of stuff. You can be right, but you can't get out, and then the stock bounces, or the stock spikes, or it drops, and you're basically trapped.
Aerotyne.
Aerotyne, yeah.
Very hot stock right now.
Yeah?
Yeah, there's just a couple of brothers that are making radar detectors out of their garage. They're out of Dubuque. Maybe it's microwaves. I'm not sure, but you call the company's main line, their mom Dorothy answers, and she is so sweet.
The company.
I actually don't know what else to... I don't know anything else about them other than that.
6 cents a share? Come on. Who buys this crap?
Well, I mean, honestly, mostly schmucks. Postmen, there's always postmen.
Right.
Plumbers. They see our ads in the back of Hustler and Popular Mechanics, and our ads actually say they can get rich quick.
Yeah, this is just a really good point that there are actually investors who believe in these companies, and it's quite unbelievable. And that's where Sykes is different and Stocks to Trade Pro is different, is they will teach you how to capitalize on the momentum. They'll never tell you to invest in the stocks.
Yeah, I mean, I know we one of our episodes we spent focusing on fundamentals and catalysts, but when you're talking about, in this instance, a 6 cents a share stock or a 60-cent share or a couple dollar stock, we will trade the catalyst. We will act on the catalyst, but I do not believe any of these companies will succeed. The failure rate is so high. There's opportunity. There's trades to be made, but never, ever believe in any of these companies.
Yeah, and Sykes said it on Larry King in a previous episode as well. He was like, the only penny stock to make it was True Jeans, and none of the others have made it.
Jeans, yep. So something that Larry King and Sykes touched on was, Larry asked, well, if you don't believe in these companies, how do you make money? How do you profit in trading them? And just like this shady character in Wolf of Wall Street saying, there's always people that want to believe. There's always the bag holders, remember we call them. It's the postmen. It's the other whatever he mentioned that are willing to buy these stocks. And remember, it's supply and demand. If there's buyers, the price will go up. So,
and in a way, it's a little bit counterintuitive, because like, why would you want to invest in a company that's failing? But it's like, it's not that business model that we're kind of subscribing to. What we're trying to subscribe to is chasing momentum and piggybacking it, and it's just a completely different model.
Is this stuff regulated, or are you guys? What are you doing here?
Sort of.
Sort of? Jesus Christ, the spread on these is huge.
Yeah, and that's the point. What's your name again?
Mine, Jordan Belfort.
Jordan, what do you get on a blue chip stock?
I make 1%. I did make 1%.
Pink Sheets, it's 50.
When they're saying spread, are they referring to the not the commission, they're referring to the percentage increase? Do you know, Tim?
So when he says spread, yeah, what he's talking about there is, again, these companies are desperate to raise capital, desperate for funding. So basically, there's a much higher commission paid on these stocks. So that's what obviously got Jordan interested here.
50%? 50% commission?
Yep.
For what?
It's our markup for our services.
So if I sell a stock at $10,000, my commission is $5,000. Hello, John. How you doing today? You mailed in my company a postcard a few weeks back requesting information on penny stocks that had huge upside potential with very little downside risk. Does that ring a bell?
Oh, yeah, I may have said so.
Okay, great. Well, reason for the call today, John, is something just came across my desk, John. It is perhaps the best thing.
So again, what they're doing here is this is what's called a boiler room, and these are stocks that are paying to have these bucket shops, boiler rooms, or whatever sell their stock. So they're going to them saying, "I'll give you $100,000 if you will sell $1 million worth of my stock," or whatever the numbers are. They need to sell stock to fund their operations, to pay their employees, etc. So they'll go to this shady operation, pay them $100,000 in quote-unquote marketing costs to get these guys to sell their stock. Then what this, again, I didn't catch the character's name, but the operator of this room is saying that if you sell 10,000 shares of that stock, I'll give you $5,000.
Yeah, one of the really interesting things about this is Leonardo DiCaprio, he's literally targeting someone on the phone and saying, "Do you want this hot stock pick?" And the person on the phone doesn't know anything about the company, has never done their research, has no idea even what the company probably does. He's just listening to Leo's words. Or Jordan Belfort is what is being played. But like from what I've learned from you and Stocks to Trade Pros, it's not like that.
Yeah, I mean, what they're doing, he's selling a 6-cent stock because people see stocks trading at $1, $10, $100, and they think, wow, if this salesman's telling me this stock can spike, I may make 6,000, 600,000% on my money. And that's what leads to, again, so many failures in trading is they believe the story and they think this stock is going from 6 cents to $60. Now, we may trade as day traders, we may trade a 6-cent stock, but we're only going to trade it from 6 to 10 cents or something, or 6 to 12 cents for a 20, 30, 40, 50% gain, because we're not going to believe and hold, and then ultimately, like all penny stocks, it'll fail and our hopes are crushed.
But the difference between, it's not the difference between trading a 6-cent stock and a $6 stock. The difference is whether you've done your research or whether you're just taking someone's pick.
Yep. And and again, that is the difference is you need to have, realistic expectations. Okay. Maybe you need to be burned on buying a penny stock from the Wolf of Wall Street to learn. I mean, again, going back to, our friend Tim Sykes, he had a great, I think it was in Business Week article on the marijuana stocks. I mean, there were fortunes made and fortunes lost because unlike a wise and veteran day trader, people bought those marijuana stocks. They were up hundreds of thousands of dollars and they gave it all back because they believed that they were going to work.
Yep. The stock trades over the counter at 10 cents a share. And by the way, John, our analysts indicate it could go a heck of a lot higher than that. Your profit on a mere $6,000 investment would be upwards of $60,000.
Jesus, that's my mortgage, man.
Exactly. You could pay off your mortgage.
So actually, that's ironic. Again, I haven't watched this movie in a couple years, but my numbers were very similar there. So, he's selling. Could the stock go that high? Sure. Will it? Most likely not. But that's the dream he is selling. And what's ironic is you see all of these other salesmen, stopping and pausing and listen to Jordan, because what Jordan has done here, I mean, these guys are all just, hey, it's penny stocks. They're all idiots. He's now taken the nomenclature and the slang and all of the terms from the blue chip stocks. So he's taken, remember back to the previous scene, they were selling Microsoft. He's now taken all of that language and all that term and turned it into using the Microsoft terms on this little one shack garage tech firm. That's why they're all in awe.
Which you can see if you were to see the movie live. But a cool point also is with a lot of these penny stocks on Stocks to Trade, we can use the maps functionality and actually see where they are, where they exist, what the building premises that they exist on.
Yeah, that's funny that you mentioned that because that was actually a feature I specifically requested in Stocks to Trade was the Google Maps link because, man, when I will buy these stocks. I will go long these stocks, but if they're located in a pole barn in the middle of a swamp in Florida, I want to know that.
Yeah, to get out quick or to short it, yeah, for sure.
Exactly.
Okay, let's do it. I'll do $4,000. 4,000, that'd be 40,000 shares, John. Let me lock in that trade right now and get back to you with my secretary with an exact confirmation. Sound good, John?
Yeah, sounds good.
Great. Hey, John, thank you for your vote of confidence, and welcome to the Investors Center.
Yeah, thanks a lot, man.
Bye-bye. Just like that, I made $2,000. The other guys looked at me like I just discovered fire.
Because he's taken what he's done there is he's taken what, again, I already kind of touched on this, but he's taken the big, he's gone from the big bank, lost his job, and he's just replicated that same salesman process. But what he has now is a 6-cent stock. And now that guy who wouldn't buy 4,000 shares of Microsoft, but can buy 4,000 shares or 40,000 shares, whatever the number was, of this penny stock. And that's where people, again, get in trouble. So again, let's go back to this Aerodyne or whatever the company was called. What these guys will do is they will find these stocks that are low price stocks that they can pump, and they will use that press release as basically fuel to get you excited. Okay. So again, if Aerodyne released some proposed new product, many times they're not even manufacturing yet, it's just a proposal, this stock pumper will use that as a way to kind of prove his case, I guess I would say.
Yeah, I mean, they will put any kind of news. I mean, I've worked in journalism, I've worked in public relations before, and I understand how it works. Like, we will say, and I don't know, like, kind of financial public relations, but I can guess it's probably worse because it's to manipulate stock prices, but they will say anything, especially penny stocks. They will say anything to get the price up.
Yep. Because again, they're, and there's two sides of the coin. Remember, these companies, many of them have good intentions, but they need to stay in business. Okay, they're selling stock because again, they have a good idea, but they need to make payroll. They need to pay rent. So they have good intentions, but it's the guys that, it's the Jordan Belforts that ruin it for everybody.
Like, for example, biotechs, like biotechnology companies, ultimately they want to cure diseases. But the fact of the matter is they lose money doing research and need to raise money from shareholders to fund further investments in research. They're not bad companies. They just need money. And unfortunately...
You cannot, as far as I know, you cannot create a disease-curing drug for a couple $100,000. You need millions. You need billions.
And 99.5%, I don't know, it's a random number, will fail. But every now and then, one will make it big.
Yeah, biotechs, one of the reasons we love biotechs is they're very tradable, but it's a home run type business. You will fail 10 times and you get that one home run and it's worth it for them.
So Tim, I mean, I feel a little bit sad because it's been such a good journey. It's been such a good ride. We've had disagreements together, but we've kind of got along a little bit as well, and we've kind of learned from each other. But I mean, is this really the end? Is this the end, Tim? Is this the end of you and me? Is this the end of me and you? Is it over?
Well, unfortunately, I wish it was, but the simple truth is that this is just the end of season 1. We've gone over a lot of great content, really enjoyed working with it, working through it with you guys, but we are going to go on a brief break here. At end of season 1, episode 6 here, we're going to go on hiatus for a couple weeks, but we will be back in November, so keep an eye out. We've got a lot of great stuff planned. We're going to review some books. I've got some historical traders. I think everybody knows I'm a big reader and really want to go over a lot of that stuff in season 2. And then we're going to continue on your trading education. That's our number one goal.
No, and I'm super excited excited. I'm super excited to see where the market is in November, December, going into the kind of the new year when we see a lot of investors kind of, I think that's a good topic to cover. I think in season 2 we can definitely have a couple of live interviews. We can maybe talk to some of the more prominent up and coming traders, review some of the books, such as what we were just saying.
And you know, I tell you, one of the things I love about coming back in, you know, October, November, December is the end of the year is really, you kind of go through what's called the summer lull, and then September starts ramping up, and then penny stocks, low price stocks, momentum stocks get very active into the end of the year and even into the beginning of the new year. So it really is, when you talk about low price stock season, we'll be back right in the middle of that. So that'll be exciting as well.
Yeah, so I mean, I'd imagine there's going to be a lot more education, a little bit more entertainment, some jokes, some laughs, some stories, but I guess just some more time spent with me and you helping me and me help, like you teaching me stock education, me teaching you how to be a bit more cool, a bit younger.
I guess I would like to revisit that. You do have a couple weeks. I think you need to hone your skills in that department for sure.
Well, hello everybody, Stephen Johnson here. Just wanted to say thank you for listening to season 1 of the Steady Trade podcast. It was fun, right? And congratulations, season 1 contest winners. Nice job, guys. And don't worry, Tim and I will not be gone for very bloody long. We'll be back season 2 starting on November 6th. And who knows, you might just hear a few dozen times or so before then as well. So keep your ears peeled. Don't even think that's possible. But if it is, you should. Or maybe you shouldn't, because peeling your ears would hurt. But anyway, thanks again for all the comments, the survey responses, and the positive energy and those goddamn supporting vibes. As always, keep it steady.
Hi, this is Donna from New York, and I like to listen to Stephen and Tim on the Steady Trade podcast. You can register to win real prizes at their website, steadytrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did, and this is how we say goodbye in New York.
You're fired. 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 You're fired.